Aaron with Cross Country Mortgage. With the talk of inflation and rising interest rates, what does that do for qualifying for a mortgage? We're going to cover that in today's video, but before we do, if you could click on the like or subscribe section and make sure you don't miss out on any future updates or videos. And also feel free to leave us any comments or questions below. We'll be happy to respond. So much is talked about in the news right now of inflation, potentially rising interest rates, what the government's going to do to stave off inflation, and a variety of other topics. But what does that do to interest rates? What does that do to qualifying for a mortgage? So we're going to cover that in a few different scenarios. So the first thing is a disclaimer. We're only going to talk about principal and interest in this video. The principal and interest portion of your payment is set aside for this purposes, and we're going to use $1,500 as your principal and interest. Taxes and insurance and mortgage insurance, potentially homeowners association dues, those are other parts of your payment. We're going to set that aside for this video, and we're just going to focus on the principal and interest. So $1,500 principal and interest, and that's also assuming you qualified for that amount. And in this video, it's just the example we're going to use. All the other criteria will be set aside. So $1,500 at a 3.5% interest rate would give you a mortgage amount to qualify for $334,000. Now, if we said that exact same $1,500 in principal and interest and chose a 4.5% interest rate, so 1% above what we just discussed, you would now be able to qualify for only $296,000. You'll see that's a decrease of about 12% in your ability to qualify for a mortgage. If we took 5.5% interest, the same $1,500 of principal and interest would now qualify for $264,000. So again, another decrease of about 11%. The standard rule of thumb that we use is a 1% increase in interest rates is about a 10% decrease in your ability to qualify. So you can use that quick rule of thumb. And why is that important? Well, in today's market, which is super aggressive, you want to put forth the strongest offer. And with interest rates rising, you have to be aware of what you qualify for. Additionally, if you are building and you have a 9-month window or a 6-month window, you have to be aware of what potentially interest rates can do, because your lender probably qualified you based on the interest rates. Maybe they put a little bit of a buffer in there, but in today's market, they probably chose those interest rates. If you were at the top end of your budget and interest rates rise by 1% over the next 6 to 9 months in your build window, you now qualify for 10% less. And you could potentially be stuck in a situation where you're dealing with your builder trying to figure out how you qualify for your home. You probably put down a deposit even, and you could potentially lose that. So if you are qualifying for a construction loan, you may want to talk to your lender also about that and the padding that they would put in there to make sure that you qualify. We hope this video is helpful. Again, quick rule of thumb, 1% rise in interest rates is a 10% decrease in qualification. If you have any questions, we're happy to answer those for you. You can reach us at ccmmichigan.com or reach out to us directly at the local office of Cross Country Mortgage here in Grand Rapids. Hope this video is helpful. We'll talk to you soon. Thanks.